Welcome again. My name is Mr. Cleophas, lecturer at Regional Curriculum Management College. Today, I want to cover professional ethics. I want to cover professional ethics in auditing and assurance, and also they are in advanced auditing and assurance. So those who are doing advanced level, those who are doing the ATD exam, that is auditing, those who are doing advanced auditing and assurance, and those who are doing the auditing and assurance in intermediate level, this is a video you cannot fail to watch. Professional ethics is a common area. In whichever profession, there must be the code of conduct of those people in that particular profession. For the professional accountants, and these are also the auditors, we have the ethics governing the auditing and the accounting profession. And that is what I want to cover. That is professional ethics. So professional ethics, they are the ethical principles or the code of ethics that regulates the conduct and behavior of professional accountants in public practice. In Kenya, the accountancy profession is regulated by the Institute of Certified Public Accountants of Kenya, and that is the ISPAC. ISPAC is a member of International Federation of Accountants Council, which is IFAC, International Federation of Accountants Council. IFAC is the worldwide organization that regulates the accountancy profession, and the members of IFAC are professional bodies. And one of the members is ISPAC, as we know in Kenya, that is the body regulating the accountancy profession. ISPAC has given this one as some of these ethics, or these are the professional ethics which I'm going to mention here, regulating the accountancy profession. And from there, I will also need to give the fundamental principles of accounting. You need to differentiate between the professional or the ethical principles and the fundamental principles. We have 5 fundamental principles, which I will cover later. But now I'm going to start with the ethical principles or the professional ethics, and I'm listing them. Number 1 is integrity. Integrity is a principle which requires professional accountants to be honest, straightforward, sincere, and truthful in all their dealings, that is in both business and professional relationships with their clients. It also implies to fair dealings with the client. So that is integrity as one of the ethical principles. I've said it requires the professional accountants to be honest, truthful, sincere in all their dealings with the client. It's one of the key principles. Number 2, we have independence. Because when we were defining auditing, we said it is an independent examination. Thus, need for the auditor to be independent. That is why independence is one of the ethics or professional ethics governing this profession. Any professional accountant, any fully qualified accountant, or any auditor, he should adhere to this principle of independence. Independence is a principle which requires professional accountants to be free from an undue influence. I've said it requires professional accountants to be free from an undue influence of management and other people. Independence has got two forms. We have the independence of mind and the independence of appearance. Independence of mind is the state of mind of the auditor when conducting an audit that he is an independent person. Independence of appearance, it is the perception by third parties regarding the auditor when he is conducting the audit. And we said some third parties may perceive auditor as not what? Being independent, where the auditor has close family relationship or he has a blood relationship with responsible officers of the company. So that is independence. Auditor should be free from an undue influence of management and other people. That is what the principle requires. We have confidentiality. This is about keeping the company secrets. So this ethical principle requires professional accountants to keep the company's secrets which they come across in the course of their work. When they are doing the audits, they are going to know many of the company's secrets. So they are required to keep those secrets which they become aware of and not to disclose the company's confidential information. We have exceptional cases or some circumstances under which a professional accountant or an auditor may disclose the company's confidential information. One, where the client has given consent for such information to be disclosed. Number two, where there is a professional duty to disclose such information. Number three, where there is a legal duty for such information to be disclosed. Number four, where the client is involved in illegal activities or in criminal activities such as money laundering. Then the auditor, the professional accountant, may inform or can inform the relevant authority. Again, the client, not the client, but the auditor or the professional accountant may be involved in a court case or he may be sued by the client. And he may want to defend himself against such allegations. In such a situation, the professional accountant or the auditor will have to disclose some of the company's information to put across how he did his work and to show that he was not negligent in the performance of his work. And by doing so, he shall be disclosing the company's information. So he is allowed to defend himself in court, and thus he may end up disclosing the company's confidential information. We have another ethical principle, which is professional knowledge, competence, due care, and skills. So this principle requires the auditor to only accept that task which is capable to perform from start to finish without unnecessarily involving other people. So that is the bit of competence. If somebody tells you are competent in whatever you are doing, this person means you can do the task from start to finish without unnecessarily involving other people. It also requires professional accountant to maintain high standards of professional knowledge and skills. So professional accountants are required to maintain high levels of knowledge and skills required in the performance of their work. So that is also what the principle requires. And thus, the firm or the auditor or the professional accountant will give quality services to the client. The ability of giving quality services to the client is what we call the due care. So that is all about the professional knowledge, competence, due care, and skills. And it is one of the ethical principles. We also have change in the professional appointment. Change in the professional appointment. So this ethical principle requires that whenever there is a change in the appointment of the auditor, the incoming auditor shall seek permission from the client company to communicate with the outgoing auditor. Said, whenever there is a change in the professional appointment of the auditor, the incoming auditor shall seek permission, or is required to seek permission from the client to communicate with their outgoing auditor. Why should these two auditors communicate? Why should the incoming auditor seek permission from the client to communicate with the outgoing auditor? Number one, to obtain audit working papers. So some questions you may be asked in advanced level or intermediate level, or even in ATD auditing. The reason why the previous auditor or the incoming auditor or the newly appointed auditor shall seek permission to communicate with the previous auditor. One is to obtain all the records. That is what we call to obtain audit working papers from the outgoing auditor. Number two, it is an act of courtesy for this communication to take place. I've said it is an act of courtesy for the communication to take place. Number three, it enables the incoming auditor to ascertain the degree of cooperation expected from the client. Enables the incoming auditor to ascertain the degree of cooperation expected from the client. Number four, it enables the incoming auditor to know the basis of charging audit fee used by the previous auditor or the outgoing auditor. Say, enables the incoming auditor to know the basis of charging audit fee used by the previous or the outgoing auditor. Another one, it enables, which is number five, the incoming auditor to know whether there is any reason, whether ethical, professional, legal, or practical, why the appointment shall not be accepted, or why he cannot accept this appointment. Another one, it enables the incoming auditor to know the reason as to why the previous auditor or the outgoing auditor is no longer the client auditor. So it enables this auditor or the incoming auditor to know why the previous auditor is no longer the auditor of the company. So that is about change in the professional appointment. And whenever auditor is denied this chance to communicate with the outgoing auditor, what shall he do? He shall consider not accepting. So he shall not accept the appointment to be the client auditor. So we have another one, like audit fee. Audit fee, the truth is that, or the principle requires that we should not charge audit fee on percentage basis or similar basis or even contingent basis. So audit fee is not charged on percentage basis, maybe 10% of the company profits. That is not allowed. It is unprofessional. Audit fee shall be charged based on some of the common bases which are given. We should not charge even the audit fee on contingent basis. A contingent base is uncertainties. Audit fee is never based on uncertainties. We have the common basis of charging the audit fee. Number one, we can have size of the company can be used to charge the fee. Time taken to do the audit is also something else which or is also another base. Another one, the risk associated with this audit work or with the assignment, experience of the firm of the auditor, reputation of the audit firm in the industry. So those are common. Also, the market rate, the prevailing market rates also can be used to charge audit fee. Technicality of the work also is a base which can be used to charge the audit fee. So those are some of the common bases of charging the audit fee, but not on percentage basis. We also have professional skepticism. This principle requires that auditors shall carry out their work, or professional accountants shall do the task with the attitude of doubt that something wrong might exist in the financial statements. So the principle requires that professional accountants should be skeptical, should be doubting, should do their work with a doubting mind that something wrong might exist in the financial statement, or that frauds and errors could be present in the financial statements. So that is the doubting mind of the auditor. Whenever you doubt, you get enough evidence. So it enables auditor to obtain enough evidence. Whenever you doubt, you're going to just achieve the objective. So enables the auditor, these are concept of professional skepticism, enables auditor to achieve the audit objective. Again, it increases the chances of giving a correct opinion, meaning reduces the audit risk. So reduces the chances of giving a wrong conclusion on the subject matter or on the financial statements. It's an important concept. So please ensure you understand integrity, independence, confidentiality, professional knowledge, competence, due care, change in professional appointment, audit fee, professional skepticism. So these ones, ensure you are good with them. So these are some of those ethics you need to know. So for the ethics, I'll stop from there. Next time I shall be doing what? Fundamental principles. Thank you so much for being my follower and for sharing these videos.